Right, hello everyone, and we are at the end of another week of trading. So we are back again, and it's pretty not a calendar driven week this week. It's been a dollar driven week. This uptrend in the dollar. I was speaking about not yesterday, last week. I was speaking about last Friday. Has just marched on higher. We were speaking about that level of 101 last week, and we have just blasted straight on through that. So we're gonna have a little bit of a chat about that, but as we look across the calendar, see what's going on across the calendar. I mean, we did have a few figures out. We had inflation, Q1 inflation out of Australia came out pretty high, came in over consensus, but we have not really, it's not materialised in a great deal of Aussie strength over the back end of the week. Not against the dollar anyway, across a couple of other currencies, yes, but has not had the effect across the board like you may imagine. But the dollar does drive things in relation to the FX market. So, the central bank we had out this week was the BOJ, the Bank of Japan. They stuck to the script. They stuck to the script of keeping their 10-year yield anchored at 0% with an upper band of 0.25%, and they are showing no willingness to change that. They're going to continue buying bonds, and they said that they are willing or open to loosening monetary policy further in the future to deal with the economic problems that country has suffered from for many years now. So, in terms of the global inflation around the world, I think they would probably like those levels of inflation. To be fair, I think inflation in Japan is still at about 1% as a yearly figure, when in other countries it's approaching double figures. So, still not high in Japan, still not where they'd want it. So, they feel as if the economy still needs some support. We did have a couple of inflation figures out. We had German inflation there on yesterday, higher than anticipated. We had inflation out of the Eurozone today, higher than last month, but not higher than consensus, bang in line with consensus, and not a great deal of movement out of that. Post-release, we have had a bit of upside in euro dollar this morning, up 66 pips as I am looking at it now. But, that is probably to be expected after the bull run that we have had in the dollar. GDP out of US was somewhat surprising yesterday. We had a contraction in Q1, a contraction of the economy in Q1. Consensus was for 1.1%, as we can see here. We actually came in minus 1.4%. So that is definitely something to keep in the back of our minds going forward into next week as well. We'll see what the Fed say about it. Something like that is unlikely to change their thinking too much with regards to inflation, but that is something that is definitely worth keeping an eye on going forward. Apart from that, I say, in terms of the Eurozone, a couple of inflation figures strong, but this GfK consumer confidence figure for Wednesday, consumer confidence of the consumer for people like us, how people like us are feeling about the economy going forward. That is in recession territory, minus 26.5. Again, a further decrease on last month from minus 15.7. Forecast was from minus 16, and we came in 10 below that, as it's minus 26.5. So that is recession territory in terms of levels of confidence for the consumer across Germany. So pretty negative figure, and that has contributed to again euro dollar downside. As we come across to here, euro dollar downside, as we can see, has materialized, accelerated throughout the course of the week, and the US dollar index, the Dixie, the DXY, has also continued its march higher. We were looking back at 101, this level across here at 101. If I blow this up a bit, maybe I'll stick it back to the hourly chart so we can see it a bit better. We'll get a line and we will just pop that on 101, and we will have a look at that. And what we were looking at last Friday was a failure to break above this. We said that any break above this would likely signal trend continuation, and that is exactly what played out. The other day we did get that break above 101, and that was quite a convincing break. As you can see, no slowing down, an acceleration to the top side. But we have reached 20-year highs across the dollar. Certainly this metric of looking at it, we have this across here. Now this is back on a monthly chart. This is a big monthly chart. We can stick a line on back here, as you can see. 2nd of January 2017 monthly chart. So this January 2017. I'm not sure the exact date that we reached this high, but we did, as you can see, pop a little bit above it. The wick did pop a little bit above it, and we have had some profit taking. We have had some profit taking over the course of today's session. Levels not seen back in euro dollar since 2002. These levels back here, December 2002 was the last time we saw these levels on the dollar index. So, it's natural that we get up to such a solid level of resistance like this, and we would have a bit of a pullback with the past 11 months we've had, since June of last year, or the past kind of 10 months, 9-10 months of pretty one directional movement in the dollar, and that has just been accelerated this month. Massive month for upside in the dollar, massive week for upside in the dollar, and the metrics of you'd have to imagine that this is somewhat overbought in the near term. I mean, I was saying that last week. For me, I've personally, the way I trade, I follow trends. I don't try and trade reversals. I'm not interested in picking tops, and not interested in trying to pick bottoms. So, but it's extremely difficult. I have a bit of a phobia personally of buying at the highs and selling at the lows. Extreme highs and extreme lows, and it becomes a bit difficult when you see a move like this and it just keeps going and going and going. It becomes somewhat difficult to just continue buying into it. For me, it's a difficult buy up at these levels. I would hope for a pullback at some point, but with the Fed out next week, maybe we get that. Maybe the GDP does play a bit of a thinking in there, in their thinking, or maybe we get a bit of a buy the rumor, sell the fact kind of response. Also, what we've got on euro dollar, if we blow this up and look at this on the monthly chart, we've got all these lows back here. This kind of region of support going back to 2015, and we had not seen these levels again since we were back here in 2003. So I think we're at a big junction point here in terms of the euro, in terms of the dollar. I mean, if we can get that break above 104 in the dollar, where that resistance level is, that opens a bit of a window to the upside. If we can get a break below here, below 105, that certainly opens up parity in euro dollar, and that would be a massive thing. It's not something we've seen back since 2002. Was parity in euro dollar. So definitely very interesting. Definitely very interesting. In terms of levels that we are at. Kind of expected that we will see a bounce back throughout the course of today, and that's what we are experiencing. So for me going forward, these levels will be my main focus of attention on the dollar index and euro dollar. It's a bit difficult. Now we're going to get a monthly candle close over the course of today. Actually will be the monthly candle close, and that is looking likely that it will not breach it on the monthly time frame. So going into next month, whether that continues remains to be seen. If we come back a bit and we have a look across towards the 10-year yield, we can come across to this, and that has not played ball. This week. That has not managed to breach 3%, and the dollar has continued trucking higher. So a little bit of a surprise for me, but it just shows the underlying strength in the dollar, and shows markets' tendencies to overshoot trends at times. I think it's probably a little bit overshot. I have to believe it's somewhat not somewhat overbought. I mean, I have to say it. I do think it is overbought, certainly in the near term, and I would be expecting a pullback at some point. Probably a bit of cash to be made on a pullback, on a broad-based dollar pullback. When we get that, I don't know, but I would if I was a betting man, which I am, I would bet on a dollar pullback. But that has just, we can see then dollar yen. We can come across the dollar yen, and dollar yen just keeps marching higher up at 130. We're at multi-year highs, 30-year highs across dollar yen at the moment, and that has resulted that trend has continued. But then off the back of the Bank of Japan slightly disappointing in terms of turning slightly more hawkish at their meeting during the week. Markets sort of half thought they may drop the anchoring of the 10-year yield, but that did not happen. That did not materialize. And that trend has continued higher, driven also in through the Bank of Japan as well. Through the Bank of Japan, coming out slightly more hawkish than anticipated. Another reason for euro dollar downside, actually I forgot, as just before I get on past this, is that Russia have cut Poland and Bulgaria off from the gas supply due to no non-payment in Russian rubles. They obviously need all the Russian rubles that they can get. They've been cut off from supply of money from a lot of other currencies, so they do need all the Russian rubles they can get, and they seem willing to cut people off from oil and from gas supply. Sorry, if they do not pay up in rubles. So that is something that the EU and with 40% of their oil or gas, coming from Russia. If Russia start cutting multiple countries across the eurozone off, that could prove troublesome for the euro. So maybe that contributes to euro dollar's downside as well. You got a weak euro, strong dollar, perfect recipe for euro dollar lower. As we come back to the calendar, one quick look at the Nasdaq, actually, at the stock market just before we move on. Pretty choppy week across all indexes, and the Nasdaq we finished 3.5% up the other day, or yesterday finished 3% down the other day. We got wild swings in each direction, has just ended up meeting back in the middle. So a bit of a lack of volatility, increased volatility, but a lack of movement in either direction off indices across the board, showing a lack of clear direction throughout the course of the week. So indices trading a little bit difficult, but US dollar trading has been pretty sweet over the course of this week. Back to the calendar. If we come back to the calendar, we have a look forward to next week's calendar, and we have a raft of central banks out throughout next week. We've got the RBA out next week, we've got the Fed out next week, and we've got the Bank of England out next week. Plus, we've got the first Friday of the month, which gives us NFP. Plus, this is the second month. Every second month, we get Canadian employment at the same time. So quite a busy economic calendar next week. Early doors Tuesday 5:30 we got the RBA, and then 7 p.m. Wednesday the Fed, and then the Bank of England midday as always on the Thursday. We will have a few updates on each of these out throughout the course of the next week. We'll have a preview before, we'll have a rundown after, so I'm not going to get too into that as of right now. A couple of other things, manufacturing PMI out on Monday out of the US, unemployment rate on Tuesday out of Eurozone. So there is a fair bit of action next week on the calendar. As I said, we'll have a couple of updates on the central bank releases, so we will speak a little bit more about them next week. And then that is it from us. Long weekend in the UK, bank holiday on Monday, so we will not be in action on Monday. We will be back on Tuesday. Back to normality on Tuesday. A bit of a break, bit of a nice long weekend. So if you're gonna enjoy the long weekend, do. If you're gonna trade on Monday, fair play to you. But yeah, we'll have a few updates next week, and we will speak to you next week for another weekly market insights. Thank you.